Welcome to the July 11th, 2022 Advanced Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your weekly fast-paced tour of the global financial markets. I'm also president of McGowan Group Asset Management, a team of 10 dedicated to your success. Some of the headlines that you haven't heard, that is deflation, and I'm about to show it to you along with taking the events of July forward to say what's ahead for the month of July and what are the possible outcomes. The first, you haven't heard this. All you've heard is inflation, looming recession, Federal Reserve tightening, all of that. I'm going to give you evidence that things are about to change between here and July 27th, the Federal Reserve meeting, and in some respects, things may already have changed for the markets themselves. Copper and lumber are right here. When we look at lumber, the yellow line, we see a 54% decrease in lumber from its peak earlier this year in February. Copper peaked at about the same time, 28% decline from its peak all the way through now. What is that? That is deflation in two major commodities. But it doesn't stop there. We go to the softs, that is corn, wheat, and cotton. So, corn, wheat, and cotton, from their peaks, corn down 6%, wheat down 41% from, of course, its invasion-driven peak. And then cotton is already down 36%. Deflation in the system. When does that show up? It's mid-July. You'll get a CPI report that reflects this. How big is it? We don't know yet, but we do know these are major components. Now, and I'll tell you what it means for the Federal Reserve, and I'll show you evidence that the Federal Reserve is likely to change posture. Here you go. We've been relentless tightening. They're going to do something else likely in the month of July. Now, this is crude oil, Brent crude and West Texas Intermediate. Brent crude is obviously a little bit higher, but you can also see their decline from the peak earlier this year when oil actually hit 130 briefly. This chart is daily, so it shows 124 and 128 is the peak. Well, if you go back to the 103 current price, that's still a significant decline. Natural gas actually hit a $10 per million BTU intraday high and went all the way to $5.50. Now it's just over $6. Well, that's also deflationary, and a lot of that shows up in the month of June. There was another June announcement that just hit, and it's the most significant thing. The Wall Street Journal headlines last Saturday were so negative, it can always get worse, looming recession, bad news. We covered that at NetWorthRadio.com in the longer audio program. It's posted for you on the website with charts and research, NetWorthRadio.com. Or you could do Apple Podcast, Net Worth Radio. What's intriguing when we look at the June decrease in the inflation rate, at least in those commodities, combine that with the big headline, 372,000 net new jobs in the month of June. What is that? It's not a recession. Could be a stealth recession where inflation exceeds the economic dollar growth. You have to subtract inflation to get real GDP growth. That's a stealth recession. And it's about to get better based upon what we see here. Now, this is the overall commodity research index, minus 9% on commodities from their peak, and that peak was May 1st. So you've got big June deflation, and that'll show up as well in a lot of the economic data. Now, here, there's a bold prediction. We know from the way that T-bills and the 10-year Treasury behave that the Federal Reserve is just as leaky as the rest of Washington. They like to play golf on the golf course, get the inside track, and major institutional buying this week in the 10-year Treasury. Let me show you what happened here. The 10-year Treasury, June 15th, hit 3.5%. And this week hit a low of 2.75%. If you've got all the inflation and the Federal Reserve is going to relentlessly raise interest rates, why would that yield decline by 0.75% in about 2 weeks? That's a huge decline, and it signals the big institutions, one, they're scared of a recession, right? Treasury buying corresponds to that. But there's something more going on there with the speed with which it did it, and I would suggest that the Federal Reserve moderates its path. And what would you likely get? Based on 2018 tightening cycle, S&P went down 20%, kind of like it is right now, and then the Federal Reserve said, here's the rest of the tightening cycle, then we're going to wait and see. Within 4 months, the S&P went back to where it was. You had a recovery rally. Now, we don't want to be all equity, because sometimes high-yield fixed income, great well-managed bond funds are a faster way to get that bounce once the Federal Reserve pauses. Now look at this. S&P year-to-date minus 17.7%. It was down over 20% at the June 15th low. What's happened since the June 15th low? S&P's up 7%. Wow, that's telling you we may have hit a bottom at that point, or a peak in pessimism. And it also means that when you have bargains that pay high cash flow, more than the 8% inflation rate, those are bargains that could be plugged in to get a pay raise. And that's what we're doing at McGowan Group for our clients. The best high cash flow assets that we can find at deep discounts after this correction. I'm Spencer McGowan, your financial weatherman, president of McGowan Group. Thank you for tuning in this week. Be sure to subscribe and you'll get updates when there's fast-breaking market news. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.